Hey there, fellow deep divers. Welcome back.
Yeah.
Today we're diving into financial planning. For those of us kind of in the middle, roughly 45 to 55.
Yeah, that's right. That time when you're thinking about retirement, maybe college for the kids, healthcare, and still trying to enjoy the lifestyle you've built.
Right, exactly. So much to juggle. We found a fascinating podcast in another language, but trust us, it has some amazing universal financial wisdom.
I'm all ears.
Okay, so get this. It says that instead of stressing about earning more, the real key is saving more.
Now, that's interesting. Seems counterintuitive.
Yeah, right.
But the more you think about it, the more it makes sense.
Especially with the power of compounding.
Oh, absolutely. Compounding is like magic over the long term.
It really is. It's like shifting your mindset, from just making money to actually keeping it.
Exactly. They talk about net disposable income.
Yeah.
It's not just your salary. It's what's left after expenses and taxes.
Right.
So even a small increase in that can have a big impact over time.
Like working smarter, not harder. And they give this great example in the podcast. They compare two people.
Okay.
One earns more but saves less. The other earns a bit less but saves more.
Yeah.
After 10 years, guess who comes out ahead?
The one who saves more, I bet.
You got it. The higher earner saving $10,000 a month ends up with, let me see, $1,720,188 after 10 years.
Okay, not bad.
But the one who earned less but saved twice as much ends up with over $3,440,377.
Wow, more than double.
Talk about the power of saving. And there's more. This podcast dives into smart money.
Smart money.
Yeah, like using financial tools to your advantage.
I like the sound of that.
For example, good credit.
Ah, yeah. Lower interest rates, better loan terms, even cashback rewards.
Exactly. Little things that add up big time.
And then there's debt.
Now, hold on. I thought debt was bad.
Well, it depends. It's about using it wisely. Not for everyday spending, but for investments or things that generate income.
So like using debt to make more money.
Precisely. Leverage, they call it.
Interesting. But what about inflation? Everyone's worried about that these days.
Right. Well, that's where good debt can actually help.
Really? How so?
For example, a fixed-rate mortgage. As inflation rises, the value of money decreases, but your monthly payment stays the same.
Oh, I see. So you're basically paying back the loan with cheaper money.
You got it.
Wow. That's a new way to think about it. But of course, saving more means actually putting money aside, right?
Of course.
Any tips from this podcast on how to actually do that?
Well, they have some really practical and relatable ones. Right. Buying things off-season.
Makes sense.
Snag deals when you don't need them right away.
Ah, I see. What else?
Consider buying previous generation electronics. You can get most of the same features for way less.
Resisting the shiny new object. I feel that.
And never underestimate the power of negotiation.
Oh, yeah.
Especially for things like service contracts. Aim for long-term agreements with fixed rates. That way you lock in a lower price and avoid future increases.
Smart. So many great tips.
It's all about being a savvy consumer, making your money stretch further.
I like it. But it's not just about external strategies, right?
Right. It's also about our internal approach to spending.
Like our mindset.
Exactly. The podcast talks about the power of delayed gratification.
That's a tough one. I am definitely an impulse buyer sometimes.
We all are. But if we can resist that instant gratification and plan ahead, we can save so much more.
I know you're right. It's like a muscle we need to train.
Absolutely.
Well, let's shift gears a bit.
Yeah.
And talk about everyone's favorite topic, taxes.
Ugh, taxes.
I know, right?
But they're important, especially in middle age.
Okay, I'm listening.
The podcast really emphasizes understanding and using tax deductions and credits.
Okay.
Which can be especially helpful for those in higher tax brackets.
Got it. Any examples?
Charitable donations.
Okay.
A great way to reduce taxable income and support good causes.
Win-win.
Exactly. And for business owners, there's this thing called bonus depreciation.
Never heard of that.
Basically, you can deduct a big chunk of the cost of new equipment.
In the year you buy it.
That's right.
So it encourages investment.
Makes sense.
It does. What about for those of us who aren't business owners, though?
Oh, there's stuff for us, too, like maxing out retirement contributions.
Yeah.
Not only are you saving for the future, but you're also lowering your taxable income now.
Double whammy.
Exactly. And then there's prepaying education expenses.
For your kids' college and stuff?
Yep. That can offer some tax advantages, too.
So many things to think about.
It's like peeling back the layers of a financial onion.
I like that analogy. Yeah. Okay, let's move on to investments. With inflation so high, What can we do to protect our savings?
That is the question, isn't it? The podcast stresses diversification, spreading your investments around.
Okay.
And they specifically recommend a few assets. That can do well in an inflationary environment.
Well, I'm all ears.
First up, we have TIPS.
Tips. Like at a restaurant.
No. Treasury inflation-protected securities. They adjust with inflation. So if inflation goes up 3%, the principal value of your TIPS goes up too.
So your investment keeps pace with rising prices.
Exactly.
Interesting. What else?
REITs?
REITs?
Real estate investment trusts?
Oh, yeah, I've heard of those, but I don't really get them.
Well, basically, they're companies that own and operate income-producing real estate. Shopping malls, office buildings, apartments.
Okay.
When you invest in a REIT, you're buying shares of that company.
So you get a piece of the pie.
Exactly. And they distribute dividends to shareholders.
So you benefit from real estate appreciation and get income.
That's the idea.
Seems like a good hedge against inflation.
Potentially, yes.
Are there different kinds of REITs?
There are. You've got equity REITs, which own and operate properties, and mortgage REITs, which finance real estate projects.
Okay.
And within those categories, there are REITs specializing in different types of properties, like healthcare, retail, residential.
Wow, a whole world of REITs.
There is.
What other investment ideas did the podcast have?
They mentioned dividend growth stocks.
Dividend growth stock.
These are companies that consistently increase their dividends over time,
Providing a steady stream of income.
which can be helpful during inflation.
Right, because your income grows with inflation.
That's the goal.
Anything else?
They briefly touched on inflation-linked annuities.
Inflation-linked annuities.
Yeah, they're designed to provide a guaranteed income stream that adjusts with inflation.
So like a pension that keeps up with rising costs.
Right.
Sounds good for retirement.
It can be, but like any investment, there are trade-offs.
Such as?
Inflation-linked annuities tend to have higher fees.
So you have to weigh the pros and cons.
Always.
And probably talk to a financial advisor.
Absolutely.
Good advice.
Thanks.
Well, feels like we've covered a lot today.
We have.
From shifting our mindset to saving to smart money strategies, taxes, and even inflation-busting investments.
A lot to digest.
It is. What stands out to you as the most impactful takeaway?
I think that shift from focusing on earning more to prioritizing saving more really hit home for me.
Me too. It's such a simple but powerful idea.
It is. We often overlook it.
And all those practical saving tips are great too.
They were. Little things can make a big difference over time.
Especially when you combine them with smart debt management and tax strategies.
Yeah.
And I never thought I'd say this, but I actually found the tax discussion pretty interesting.
Really?
Yeah, I realized I need to up my game in that area.
It's important.
Yeah.
It can be empowering to know you have options.
That's true. And then the whole world of investments, especially with inflation.
It's a lot to take in.
It is. But diversification is key.
Absolutely.
And exploring things like TIPS, REITs, and dividend growth stocks.
Can be really beneficial.
Before we wrap up, I have a question for our listeners.
Okay, let's hear it.
If you could design your life to work less, but still achieve your financial goals, would you?
That's a good one.
And how could the strategies we talked about today help you get there?
It makes you think about your priorities and how to use your finances to create the life you want.
Exactly. It's not about wealth for wealth's sake. It's about freedom and flexibility.
Maybe it's working less to spend more time with family, or pursuing a passion,
Yeah.
or just having more leisure time.
Whatever it is for you, the key is to be intentional and make a plan.
Well said.
Well, that's all the time we have for today's deep dive. We hope you found it insightful and empowering.
And that you'll take some of these ideas and apply them to your own lives.
Thanks for joining us.
It's been a pleasure making your money stretch further. And it's not just about external strategies, it's also about our internal approach to spending.
Like our mindset and stuff.
Exactly. This podcast, they really emphasize the whole thing about delayed gratification.
Oh, man, that's a tough one. I know I should, but sometimes I just can't resist those impulse purchases.
I get it. We all have those moments. But if we can just train ourselves to resist that instant gratification and plan ahead, it can make a huge difference in how much we can save. It's true. Like building a muscle or something.
Right.
Okay, well, let's shift gears a bit. Let's talk about everyone's favorite topic, taxes.
Taxes. Yeah. Not the most fun thing to talk about.
Definitely not.
But they're important, especially when you reach middle age like we are.
All yours.
So this podcast, they really highlight the importance of understanding. And utilizing tax deductions and credits,
Okay.
which can be super beneficial for those in higher tax brackets.
So like us,
Exactly.
do they have any like specific examples?
Yeah, for sure. Charitable donations are a good one.
Okay.
It's a great way to reduce your taxable income and support causes you care about at the same time.
So you're doing good and saving money.
Exactly. Win-win.
What else?
For business owners, they talk about bonus depreciation.
Bonus depreciation.
Yeah, it allows you to deduct a significant portion of the cost of new equipment
Oh, wow.
in the year you buy it.
So it's like an incentive to invest in your business.
Exactly.
That makes sense.
Yeah.
What about for those of us who aren't business owners, though? Oh, don't worry. There's stuff for us, too, like maximizing retirement contributions.
Okay, yeah.
You're not only saving for the future, but you're also lowering your taxable income right now.
Oh, wow. Double benefit.
Exactly. And then there's prepaying education expenses.
Like for your kids' college.
Yep. That
Yeah.
can offer some tax advantages, too.
So many things to consider.
It's like a whole hidden world of tax strategy. And
Right. Okay, let's move on to investments. With all this inflation going on, what are some good ways to protect our savings?
that's the million-dollar question, right? The podcast really emphasizes diversification, spreading your investments across different asset classes.
Okay, makes sense.
And they specifically recommend a few assets that tend to do well in an inflationary environment.
I'm listening.
First up, we have TPS.
Tips, like giving someone a tip.
No. Treasury inflation-protected securities.
Okay.
They're designed to adjust with inflation. So if inflation goes up, say, 3%, the principal value of your TPS goes up 3% too.
Oh, so it keeps pace with rising prices.
Exactly.
That's pretty cool.
Yeah. It's a way to protect your purchasing power.
What else?
Another good one is REITs,
REITs?
real estate investment trusts.
Oh, yeah, I've heard of those.
Hmm.
But I don't really understand how they work.
So basically, they're companies that own and operate income-producing real estate.
Like what?
Shopping malls, office buildings, apartments, things like that.
Okay.
And when you invest in a REIT, you're buying shares of that company.
So you're kind of like a part owner of those properties.
Exactly. And as those properties generate rental income, the REIT distributes a portion of that income to shareholders as dividends.
So you get both potential appreciation in the value of the real estate and a steady stream of income.
Yep, that's the idea.
Seems like a good way to hedge against inflation.
It can be. Real estate tends to hold its value pretty well during inflationary periods.
That's what I've heard. Are there different types of REITs?
There are. You have equity REITs, which own and operate properties, and mortgage REITs, which provide financing for real estate projects. And then within those categories, you have REITs that specialize in different types of properties, like healthcare REITs, retail REITs, residential REITs.
Wow, so many options.
There are.
Any other investment ideas from this podcast?
They also mentioned dividend growth stocks.
Dividend growth stocks.
Yeah, these are companies with a solid track record of consistently increasing their dividend payments over time.
Okay.
So you get a steady and growing stream of income, which would be really helpful during times of inflation.
Right, because as prices go up, your income from those dividends is also going up.
Exactly. It helps to offset the erosion of purchasing power.
That makes sense. Any other inflation-busting strategies?
They briefly talked about inflation-linked annuities.
Inflation-linked annuities, huh?
Yes, these are financial products designed to provide a guaranteed income stream that adjusts with inflation.
So it's like a pension that keeps up with the cost of living.
Exactly.
That sounds pretty good for retirement.
It can be, but like any investment, it's important to understand the trade-offs.
What kind of trade-offs?
Well, inflation-linked annuities tend to have higher fees compared to other types of investments.
So you're paying for that guaranteed inflation protection.
Essentially, yes.
That's always a balancing act, isn't it?
It is.
Weighing the pros and cons and figuring out what's right for your situation.
Exactly.
Probably a good idea to talk to a financial advisor, too.
Oh, absolutely.
Get some professional guidance.
Always a good idea.
Wow. We covered a lot of ground today.
We did.
From like reframing our mindset around saving
Right.
to all those smart money strategies and tax optimization.
Yeah.
And even those inflation-busting investments.
It was a lot.
It really was a packed deep dive.
What stood out to you the most?
Honestly, I think it's that shift in perspective from just focusing on earning more to prioritizing saving more.
Yeah, that was a big one for me, too.
It's so simple, but so easy to overlook.
It is.
And all those practical tips for saving money were great, too.
Yeah, those were good.
Little things can add up.
Absolutely, especially when you combine them with smart debt management and tax strategies.
You know, I never thought I'd say this, but I actually found the tax discussion kind of fascinating.
Oh, yeah.
Yeah, I realized I have some work to do in that area.
We all do.
And then the whole world of investments.
Mhm.
Trying to figure that out with all this inflation.
It's a challenge.
But diversification is key, right?
It is.
And exploring those tips, REITs, dividend growth stocks.
Can make a big difference.
Before we wrap up, I have one last thought-provoking question for our listeners.
Okay, shoot.
Imagine you could design your life to work less, but still achieve your financial goals. Would you?
That's a tough one.
It is. And how could the strategies we talk about today help you get there?
It really makes you think about your priorities
Right.
and how to use your money to create the life you want.
Exactly. It's not about being rich for the sake of being rich. It's about freedom and flexibility.
Maybe it's working less to spend more time with family, or pursuing a passion, or just having more downtime.
Whatever it is for you. The key is to be intentional and make a plan.
Couldn't have said it better myself.
Well, that's it for today's deep dive. We hope you found it helpful.
And that you'll take some of these ideas and apply them to your own life.
Thanks for joining us.
It's been a pleasure.